I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is October 2nd, Monday, 2023, start of the new quarter here, of the last quarter. So what we had is when we made the video Friday here, we had this big drop, right? And we had a big price imbalance. What did you expect to do? Well, we had lower objectives of the low here, which we made on Wednesday last week. And then potential possible lower objectives here with these lows here from let's just say June 1st, May 25th, 2023, and then a price imbalance right there inside this weekly imbalance that we've got already marked in the chart. I'm not expecting that to hit today or anything, but in general, lower objectives there. And what is the price doing? I mean, we opened up and we gapped up and we wiped out the imbalance here, and it came up into this last 4-hour block, right? Nicely, right? And then shot down to take the liquidity from Friday and take the liquidity from Wednesday. Very, very, very simple. So let's go into it here real quick. As you'll see here, when we made the video Friday, we had that nice big drop, right? Nice structure down, came down and took out that liquidity here. Remember, we got inside that imbalance candle. Watch Friday's video so this makes sense. And all that. So when we closed here, it's like, okay, well, if we're bearish and we have this leg here from here to here, and we're here, we expect to come up, more, get inside on the higher time frames imbalances, which would technically be better on a 4-hour, the 1 hour, 30-minute, 15-minute, not so much here, but at the end of the day, we retraced from this leg here to here. Retraced up above the 50, right? Smacks to 61. See that? Look at that. Do that in London, 330. Price pops up right there to take out that liquidity from Asia, right? Get into this candle pretty much at the end of the day. Also, again, on the 4-hour, much cleaner. You see that big price imbalance from there to there. Price slowly creeps up right there. Beautiful. See, these first two candles in Asia didn't do it. All right. Then this candle here at 2 in the morning shoots up and then literally hits this candle, because these, notice very closely here, you'll see that this candle doesn't hit that block. Okay, what's the low of this candle? Look up there. Low is 33,928. What's the high of this candle? 33,927. Look at the low again of this candle. 33,928. So by a point, this candle, even this candle, does not tap this block. Then 2 o'clock comes and does it. See that? And comes right to the previous day open. So let's take a look at that real quick. So obviously this over here is Monday. This was Friday. Look at the open of Friday gap. Look where it went. Went straight to it as well. So I only reference these like a day before, never 2 or 3 days that much far deep. But yeah, that's just part of the confluence of everything I'm mentioning. And the up candles are holding as resistance, showing you the order flow and the strength to the downside. And then once we reached here, which I'm not trading or anything. I didn't trade today at all, by the way. Long story, but personal matters and all that. But price comes up here, takes out the liquidity, and that's that leg. So the leg down, all right, retrace, leg up. All right, new leg down. What's that new leg down look like? Well, today, because it's a new quarter and it's Monday, and we had 2 pieces of news today. We had at 10 a.m. we had news, right? And then we have at 11 a.m. we had Powell speaking. So, I'm not relying on this day at all, to be honest. So you got to, take a break, kick back, let it kind of play out for itself. But it was actually an easy day, but in this was chop. So you would want to be very patient and wait for external levels, in my opinion. But the bias was still bearish. So when this is coming down, okay, so we're in this fib. And if you project it out to -27, it shows that this range here, from here to here, is going to come to about right here. I mean, we're just ballparking here. Does nothing have to be perfect, but sure enough, it does come right to it. It does give you 3 drives pattern here, right? And then boom, take for the buy for the retrace. But before we get into that, just the weekly gap as well. And order flow, you can see the order flow bearish. Let me get into the 1 minute and then so I could be done here. But very, very choppy. I would have not, so I didn't take these trades. I'm showing you what I would have took. But these trades right here were beautiful, and I did see that. I was like, man, it's too easy. But anyways, so 9:30 here, right, pops down. So remember, we have this liquidity. You got these 2 green lines. That's the liquidity from Friday. That's the low of Friday. And this low right here is the low of Wednesday, which is here. All right, so we have that low and we have that low. That's the low of Friday. That's the low of Wednesday. Okay, now that we've seen that. All right, 9 o'clock already hits that liquidity. So we do have some way more potential on the downside, and we expect this leg to come down, right? So if this leg here, we don't want to see it bounce from here if it's bearish. I mean, can it bounce from here? Sure it can, and it actually did. But the real goal was to also take out that low that I just mentioned on Wednesday. So, and to obviously get a little lower, make a nice leg down, and then, you know, and then have a retrace back up. Okay, so a healthy leg, right? A very ugly delivery here, to be honest. Very, very ugly delivery. But if I was trading, 9:30 comes down, takes that liquidity low, I'd still take that buy. I would take this buy. But to be on the safer side, when you take this buy, what is this doing? It's coming back up right here to get into this sort of resistance, because this was support, retrace, breaks below. You got these candles right here. See that? Comes right into this inefficiency. Look at this candle right here. See to the left? Comes right into that little block. See that? You can see that, right? See that little candle right there? This one? See how it pops right into it? Barely taps that high right there. And this is your idea of support resistance. This is also a resistance block right here. And we're inside at about 50% of that. All very high confluence stuff. The little details that you can see. This is a great sell that I would take for. And what am I taking this sell for? Well, I have, at the least, I'm taking it down to this low. That's for sure. But my better target would be here, which would be the Wednesday low that I was just mentioning. So price retraces, holds this up candle here, holds its resistance, holds the order flow down, and then boom, comes and takes out that liquidity. That's an immediate take the profit. Good. And this is a possible buy. So price comes down. All right. If you took this buy in this wick on a lower, this is only 1 minute. So sub minute, you could have, but it failed. Retraces back, does not break that low. When it doesn't break that low, okay, you can either push enter here with the confluence of the low that we just took out, remember? And the only reason why you would take this trade is because you could wipe out liquidity here. And it might even possibly go to a 50 level on the fib. So let me do this real quick. First, this fib is here, possibly, right? Okay, we've already got that high right there that we've already identified this range and this range. This range right here comes down, okay, to a fifth, comes down, I'm sorry, to take out that liquidity. All right, do we retrace back up to a 50? Very close. Look how close we got. We got by close by 3 points, but it is not no cigar. So we did not hit that 50. So it's technically not fair delivery. So, but that's the purpose of this buy, because of you taking out a nice piece of liquidity from Wednesday, and then we can retrace and get into these blocks. Just a trade idea. Now, you could have took this trade here to a couple places. You could have took it right above that high, that high, that high to the left right here. See that? Or that high, right? That would be my main targets for this trade, and it pops right above here. Little retrace right there, pops up again for like a second drive type of idea. and does not get into the 50. But what was also more important than this high was also these clean highs right here. So everybody, before they dip down, they got into this sell here. Algorithm will come and wipe them out. Look where it goes. Really, it goes above this high and it goes above that high. Does not go above that high. This candle is holding the price. It is controlling the price. That's how I see it. That's how I'm mentioning it. So price shoots up to it. Anyways, no 50 delivery. Does it have to? In my opinion, I would like to see that. Now, because I didn't see that, I will drag this fib until we see a 50. So I'll put this here, right? All right, so price comes up, takes out that liquidity we mentioned. Now that we're up here, all right, if it doesn't hit that 50, it's also, you'll see it in plenty of my videos, you'll see that sometimes it won't hit the 50. It's not common, but sometimes it happens, and you can still take that trade. Now, if you chose not to because it didn't hit the 50, that's on you. But I would probably still take that shot, because forget what's more important. It's not the range. What's more important is them taking out that liquidity right here and right here, to be honest. So forget the fib, right? But we're just speaking it loosely. So when this candle closes, you have a nice wick in here. Price breaks down, goes back up into the wick. I'd like to enter at 50. I'd like to enter at that wick. I'm sorry, at the start of the wick, or if you take this wick and you break it into 4 quadrants, meaning 50%, 25% above, 25% below, and the whole range of the wick, I would like to say the first 25%. I would like to enter in there. My stop loss would be at the 50 or above the next quadrant, because it could wick up a little bit higher, but that's generally what I'm looking for. Sure enough, that does pan out, sells all the way. Where are you taking this sell? Number one, you're definitely taking it to either this low right here, these two lows right here, or obviously that main liquidity here, right? Because you got these two pieces of liquidity. We're bearish. We do plan on, extending this leg and coming lower, right? And this was not a 50 level. So, these would be the main targets. Whichever floats your boat. As you see, this candle is rushing down. So if you had already, were holding to maybe hit this block, I mean, you could stay in it. Anyways, what does it do? It gives you 3 drives. 1, 2, 3. So you could have held this trade until you said, I got 3 drives. I'm waiting for 3 drives to show me, and then I'll get out. And then I'll, maybe get into a new trade. Okay, well, that's what you could have did. Beautiful trade right there. Anyways, comes down. Now what's important to me is the time of the day. This is lunchtime, and then now we're getting into a macro here after the lunch, and then between 12:50 and 1:10, you'll see a macro run. And then as far as the time of the day, it is becoming into the PM session. So this would have been a beautiful trade right here, because not only do you have your 3 drives, but if you extend the fib, that 50 is dangling right here, right? And then you have all this imbalance of price, and the algorithm is going to want to wipe people out, right? So we've identified where the range is, but now we're also in this range from here to here. So at the least from here to here, if you put a fib from here to here, forget the master fib that I got or control fib, you expect it to come to a 50. You have plenty of options where you could have took this trade. You could have took it to the highs here, acting as a resistance, and if you thought it'd come down, at least you took it to this trade. Or you could seal this imbalance. That's a very big ISO. Can't miss that. Or number 2, into this sequence of down candles. This could be a resistance as well. That could be a resistance as well. And even right here, okay, when we are climbing up, you could wait for 3 drives if you like. Plenty of ways to do this. But if you took it to this supply candle right here, see how the price comes up? Look at the price coming up, and boom, it stops right there. So it stays inside. How can I put it? This time frame does not help what I'm doing, actually. But you wouldn't be able to use this candle. If you did, that's fine. But if you were trading to it, then that's fine. You know, because it could reverse from there. If this candle doesn't hold, then what do you have next? Well, generally you'll look at this candle up. Again, this is a 1 minute, but it does almost tap this little imbalance sitting right there. And but this wick is what held that price down right there as far as this time frame goes, right? And then, you know, these other time frames wouldn't help you, but same time, this on the 15-minute, this up candle right here, you're approaching that 15-minute up candle and all that, right? So price starts to peter out. You see this right here? Boom. This was a nice sell. We're at the 38. We're not at a 50. That's fine. And this would be a reason to sell down, only because it's going to retrace. It could be a leg to come down, to come back up, because now we're in a counter trend leg. So this was the main trend leg down here, and now we're counter trending up, right? So these are the ideas you got. You don't got to, it doesn't have to be perfect. You could have took this trade anywhere. And then from here, this was a nice trade to take this where? Well, this trade would be nice to take down this liquidity here, or you got this eyesore of an imbalance right here. All right. And you also have this liquidity, but that might be overextended. We don't expect this to come and break through. We kind of already see that this is already the leg, right? And we've accomplished, we've already accomplished on the downside what we wanted to do anyway for today speaking. So sure enough, we come up here to wipe people out and balance price. Then it retraces to wipe people out and balance price again. And then it ends up buying back up to wipe out everybody here and especially there. And now it sits back into this candle that I was mentioning. So you could have handled this on numerous ways. And then we closed right here. Now we opened up. So in my opinion, I think we're going to still come up higher, even though we just opened up. Can it sink from here? Sure. And then I have to extend the fib. It is dangling that carrot at the 50, so it doesn't. So either, let me just show you on smaller time frame. So what do we have still here in today's price action? Well, we got that big 4-hour imbalance, right? That's not balanced, and you also have the liquidity sitting right there. This is the 4-hour. So if I was to just highlight it real quick so you can visually see it, we can fine tune it too. It's fine, but let's just do this. I'm just gonna highlight it like that so you could see it over here. So what does this look like? Okay, so we have here's a 50. We have liquidity sitting there, right? That we developed today, and we have an imbalance on the 4-hour. If you can see it on the 15-minute, if I was to refine this, I'll just do this right there. See that? And this is a very high probability of area of a coming to, could even come up higher above. And you see on the 1 hour here, you got, it's pretty big there. Right. So kind of looks like the 4-hour again, but somewhere in this zone looks good to me. As far as it retracing, taking out that liquidity and then coming back down. Okay. So I'll just leave that for there. Liquidity here is low down here. That's the goal. But can it come down from here? Sure. So it's either going to just kind of make this simple, where we are right now. Let's do this. You know, we're looking for something like this. All right. That's option 1. Option 2 is well, I need that fib. Well, let me just see where the 50 is. 687 area. Option 2 would be that it doesn't go above it, and it just, what did I say, 687? Anyway, yeah, something like that. It doesn't go too far, right? And still comes down. All right, so that's option 2. And option 3, I don't see it happening, but that's if we were to start making bullish flow that way, you know, and then in that case, you know, you might see something like this, you know, where we start doing this, right? That's the only, this option I don't really see happening, because right here on the week, we have a higher time frame objective here. We have liquidity sitting there. We're very close to it. I mean, like, it's nothing to wipe those people out right there. So that's my opinion there. And then as far as dollar goes, again, another bullish day. That's why I said on Friday, I think we're still going to be bullish there. And we came into that imbalance there on the daily. We're coming up real close to this target here. I'm not claiming this to be a target, but on the upside, if we keep going up, this is definitely the first place to go to. Because right now we're still inside this wick and this up candle. So pretty bullish right there. And that's going to dictate us coming down one more time again until it starts to kind of retrace on its own. Look at dollar been oversold for a while now. So very possible that we do see the retrace. If we start to see dollar retrace and turn around, only reason why I don't say that is because we're still in an inflationary period. We still have rates up. And this is well going into the rest of this year and even next year. So I'm assuming that dollar does want to come up higher and, get into this possibly, right? If not, and we get the quarterly shift that we need for indices to be going up, I know we'll still come down first, but when you start to see dollar coming down, that's when my option 3 that I just gave you will kind of kick in. All right. And other than that, we also for sure came down one more time here. Even if it doesn't come down here, we for sure came down one more time because that was the month low of September. See how this candle opened up here and took out that low right there for previous month? That's a very high probability of hitting that area. I don't see why they wouldn't take out the month of May and the month of June. No, I'm sorry, month of May. And then, why is it doing that? Hold on. Huh. Anyways, these lows right here, I don't see why they wouldn't come down and just wipe that out before they went back up. It would make sense for them to do that. So, but if they didn't, this was good. For them to take out the previous month's low, we can retrace back up. You see, look on this monthly chart. We can retrace. There's an inefficiency on the monthly chart, right? Which is, you rarely see that. So I know we're coming back up to this right here. So we could come back up here, right? With, which we actually did, but that was in last month's candle. This month's candle has not came to that level. So we're going to revisit this for sure. And then even possibly right here. See the low of July right here, which would be this. No. Wait. Where's that low at? Well, that would show here. Okay, so I was first talking about the July low here, and then the next target would be the August low. Sorry, the August low. I'm going to do it here. I'm just going to do this. All right, so I could see us coming back up to here as well. So if that's option 3 kicks in. Other than that, let me see. And then just to show you as far as the indices all together, we were the weaker one. We've generally been the weaker one. Nas stayed up here, right? Didn't need divergences, but this was a nice, that's why I said this was a nice sell at this 1130. We had a nice, divergence right there on Nas. See that right there? And we had lower highs here, so that pushed us down more. I mean, that pushed them down too, but this was a crack for them. And another one is right here, where their lows at 9 o'clock did not take out this low. 1 second. See that? So we had a higher low here in Nas that gave the strength to go up. And then S&P and Dow came and took out their lows of Friday we're talking about. So that was a little bit of confluence as well for the idea and framing the day and all that. So also we do have non-farm payroll this week here. So we got on Wednesday, we have Was it Wednesday? Yeah, Wednesday here. We got news for non-farm, and then on Friday, well, we got news a whole week technically, but Friday we have also non-farm. So with that being said, it is possible. It is possible. What I'd like to see is that we come down. They use Wednesday to push it down, and then reverse, and then Friday, come back up into these levels that I got right here. All right. So I hope this helps. Take care and God bless.